All right, so let's get started. All right, again, we're going to be talking about a couple things. The SPY Super System is a piece of software that I'll show you. It used to be called the Compass system, but it's been enhanced. And then we're going to talk about strategies that we use off of the SPY Super System software. All right, and again, I do have a live trading room that I'm in all day long. Market open, market close. Not very many rooms do that. And I'm in there answering questions, making suggestions, showing charts, and covering our particular trades that we've got. And I have a text alert service where, again, some of the trades we take in the room, not all, because some of the trades we take in the room are going to be too quick to be put out an alert. We may only be in them for half an hour, and we're not going to alert on those. But any of the longer term trades and swing trades will all be alerted on. Okay, first thing I've got to do, of course, is go through the disclaimer. All signals and trading opportunities we provide are for educational, demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, again, if you have any questions, put them in the question box. If it's a question I can't answer, if you put your name and your phone number or your Skype username in the question box, Rory, who's the main guy at Right Line as far as handling all of the details of this, he'll give you a call and just one time just to talk to you, to answer any questions that I perhaps can't. Hopefully I can answer most of the questions that you have. All right. So again, this is just a graphic. This is a graphic of the SPY Super System software, and we'll get into a lot of charts to show you this. I run the SPY Super System on thinkorswim, on my thinkorswim platform. I do not trade on thinkorswim. You don't have to trade on thinkorswim to use the SPY Super System software. I trade off of Tradier, but you can trade off of thinkorswim. You can trade off of Tastyworks. You can trade off of Fidelity. You can trade off of Robinhood. You can trade off of any particular trading platform you want. But the software itself runs on thinkorswim. So you have a thinkorswim platform to put the software on. You don't have to pay for thinkorswim. You can get the platform downloaded for free. And the folks at Right Line will go ahead and install the software on there, and we'll talk about that as we go. And again, the whole point of the SPY Super System software is to track institutional money flow, find out when institutions are in trades and when they're not, because that's one of the key elements to finding high probability trades, and we'll talk about that. This is just what the alert looks like. It's a Compass, which is actually a SPY Super System, but the Compass SMS text alerts, they'll come out to your phone if you're a member of the room and on the alert service. Doesn't take long to get the alerts. I'm on the alert service, so I can time them. Takes me, my alerts come to me after I release them in about 10 seconds, maybe a little bit less sometimes. Not available in all countries. Yeah, the thinkorswim is, I'm not sure the countries it is or is not. You can also run this, by the way, it'll run on Ninja. It's called the money flow tracker, but it's the same kind of data. It will run on the Ninja platform. Okay. The first thing I'm going to do, and I do this in every webinar, anytime I talk about, so if you've heard me before, this is going to be redundant, but I talk about what makes up a market, what makes a market move. And that's really important. These little marbles here are retail traders like myself and most likely everybody else here. It's important to understand that when retail traders are the majority of what's trading in the market, if we don't have any concerted moves by institutions, and mostly retail traders are in here trading, what you're going to get is a lot of chop and a lot of chaos. We're not going to make any money if we're just trading against retail traders without institutions moving this particular stock, because things chop around. You have little losses, big little gains. You're just not going to have any consistency. So these are the retail traders. These are the institutions. This is what moves the market. This is where the money comes from, and this is when you're seeing big trends in the market or in the stock. This is what's causing it, and the institutions are made up of a few different groups here, 4 different groups. Investment banks, which everybody knows about, I think. Goldman Sachs, JP Morgan, Wells Fargo, all these are huge organizations with billions and billions of dollars to invest and trade. And they have trade desks where they actually have humans making trades, but most of their trades come from program trading, or algos. They call them algos. They're software programs that have been written by these investment banks to look for specific conditions and specific news and trade off of that. So that's where most of your trades come from. About 80% of the trades that go through the market are coming from algo trades from the institutions. Now, the institutions are also made up of hedge funds. There's hundreds of hedge funds with billions of dollars. They also would be part of the institutions, as would pension funds. The big, huge pension funds, police, firemen, state workers, all of these big, huge pension funds, again, more billions and billions of dollars. And the last would be the mutual funds, such as T. Rowe Price, Vanguard, again, more billions of dollars. So these are the folks that are going to drive the market. And when they're, if they're trading against each other, it's not going to help us at all. It's only when there's a concerted drive in one direction by a lot of institutions that we're looking to follow those trades, because that's going to make quite a big difference in the actual trading itself. It's going to really change those a lot. One thing you can understand about these algos, it's important to understand. If you ever watch the market after when a significant piece of news comes out, which would be like the Fed, the FOMC, when the Fed announces what they're going to do with interest rates, or the jobs report, for example, on Friday morning. Once a month, the job reports comes out first Friday of the month at 8:30. If you watch the market right when that news comes out, and I mean right when that news comes out, at 8:30 in 1/100th of a second, you're going to see a big move up or a big move down in the market. It's going to be very, very quick, and there's no way that humans can do that. You can't click on your mouse fast enough to do that. That's all algos. They read the news and they make trading decisions off of the words and sentences they see in milliseconds. So that's one of the ways to tell that algos are driving this. Anytime you see any really huge news that's coming out and the algos just drive the market up really fast or down really fast in a couple of seconds, that's not humans. That's all algos that are pushing the market. Okay, so that's what makes the market move. Our job is to find out when the institutions are in the trades and when they're not. All right, and in the room, in the alert service, we have a couple of simple rules we trade by. We look to trade the best and skip the rest. Sounds really simple. It's not that simple. There's specific criteria that determine the best trades. Everything else is a trade we don't want to take. And skipping the rest is really important. If you can eliminate the trades that you might have taken, but you don't, because you find out that they don't have the specific criteria that you need, that's going to help you a lot, because it's going to cut your losses way down. You're going to be making fewer trades, but most of the trades you're going to be making are going to be profitable trades. And this is an objective. Our objective is not to make trades. Our objective is to make money. This is the one I put here because one of the retail traders' biggest problems, most retail traders' biggest problems, is over trading. They take too many trades and they get bored. They're sitting in front of the machine. They haven't traded for an hour, so they take a trade. May not be a great trade, but they'll think it's okay. But it doesn't meet all the criteria. So again, I emphasize our objective is not to make trades. Our objective is to make money. And if you try to remember that, it'll help. Maintain discipline. Only take trades that meet the specific criteria that it outlines that are high probability trade setups. That's maintaining discipline. Don't go from one strategy to another strategy that hasn't been proven just because you're bored. So maintaining discipline and remaining patient are the two key. These are the two biggest criteria I believe that makes most retail traders lose money and most professional traders make money. They're able to maintain discipline and they're all remain patient. They wait for the setups to come to them before they trade. Okay, so as a profitable trader, we need an edge over other retail traders, because keep in mind, we're only taking our money from retail traders. We're not going to take money from institutions. We have the SPY Super System software. This is a big edge for us. It helps us identify when institutions are in the trades. We trade relative strength and relative weakness. This is a very really overlooked criteria. This doesn't mean RSI. This means how is my stock trading that I'm thinking of trading? How is it moving in relationship to the SPY or the triple Qs? How is it moving in relationship to the SPY? SPY is moving sideways and down, and you've got a stock that's stacking green candles and moving up. It has relative strength, and vice versa. Adding this particular criteria to your trading is going to make all the difference in the world, because if the market turns against you when you're in a trade, but you had a stock with relative strength, it's not going to drop as fast. It limits your losses. It even gets you out on a win when the market may be going against you. Third thing is we trade with the market trend if there is one. We're having a bullish trend on the day, then we want to trade long. If we're having a bearish trend, we want to trade short. That doesn't happen every day. A lot of days are just chopped. So then you have to lean back on your institutions and your relative strength. And the last one is to buy near support and sell near resistance. Wait for the stocks to get to a support level and then bounce. Or if you're going short, come up to a resistance level and then head back down again. And you want to get in as near to that support and resistance level as you possibly can, because it's gonna make your stop when you exit a trade. If it goes against you, it's going to make it much closer. You're not going to have to wait very long for it. All right, the compass system, or the SPY super system as we call it now, its job is to identify the highest probability trade setups while sidestepping trade setups that look good but will fail more often than they succeed. This is really pretty important. That's going to make us profitable. The system does this by identifying when institutions are driving the move and when they're not. And we're only going to take trades that are being driven by institutions. How the software does, the SPY super system software, or like what used to be called the compass software, it analyzes very complex trading data, and it displays the results in an easily identifiable visual format. This is important because it's very complex to try to get into a trade and look at everything you need to determine if institutions are in there. But what this software does for us is kind of look at all that information, crunch the numbers, and then it's going to display them in colors on the screen. That is going to make it easy, even for a novice trader, to say whether institutions are buying something in mass or selling something in mass or not doing much of anything. All right, and this, again, how does this give us an edge over retail traders? We're only taking trades that are being driven by institutions. We're trading stocks that have relative strength or relative weakness, again, versus a SPY and versus the Qs, and we trade in the direction of the overall market trend. All right, it seems very logical. I don't know very many traders, the retail traders, that do this. They don't know, and they're not able to identify when institutions are in the trade. They think they know sometimes, but they don't know as well as we do. They don't even think about relative strength and relative weakness. And typically they will know enough to try to trade in the direction of the market, but a lot of retail traders try to pick bottoms and pick tops, which is extremely dangerous. So this is how it gives us an edge. Our trades will be supported by the institutional buying and selling. They'll be out the spot. The stocks will be outperforming the SPY, the index, and they're going to be moving in the direction of the overall market trend. If you're able to do this, you've got an edge over 95% of other retail traders. It's important to understand that without a piece of software that lets you know if institutions are in there, it's a lot more. It does a lot more guesswork than there is what we got. So if you go into trading is like going into a battle, like going into a war against other retail traders. If you've got better weaponry, if you're going in there with tanks and bazookas and they're coming at you with pea shooters and slingshots, you're gonna take their money away. I mean, I don't want to be harsh about this, but we're in there trading against other retail traders, and when we win, they lose. And that's just the way it is. So again, these are our edges right here. All right. Okay. Now I have what's called a high probability trade setup funnel. This is a virtual funnel. It's basically the thought process I go through when I'm looking to find a trade to take. The first thing I do is I look at the daily chart. If it's not going to be a really quick trade, a scalp trade, or something that's only going to last for 10 or 15 minutes, but if it's going to be something I want to be able to hold, for several hours or overnight or a week, I have to look at the daily chart first. It's very important to look at the daily chart. A lot of retail traders, they'll be trading off of a 2-minute chart or a 5-minute chart, and they'll see some setup that looks really good to them, and they'll trade that stock off of the 2-minute or 5-minute setup without even paying any attention to the daily chart. This is a big, huge problem, because if you're going long a stock that looks good on the 5-minute chart, but it has a bearish daily chart, then you can't stay in that trade overnight. And you can't even stay in it if it starts to go against you. You don't have any staying power at all. So by trading in the direction of the daily chart, it's going to give you a lot more staying power. You're going to be able to take it for a longer period of time. Again, we trade with the trend, both stock and market trend, if there is one. The SPY super system has got to align. If we're going long, the SPY super system has got to tell us that the institutions are buying that stock. Right? This has to occur. Otherwise, it's out. Then we look for relative strength and relative weakness, and then we try to enter near support and near resistance. So as you run through this checklist, and it's basically done critically like this daily is the most important. SPY super system would actually normally come right under that. But this is the criteria I go through. The stocks that drop out the bottom here are going to be the stocks that I'm going to be looking at, and I'm going to look at them in a little bit more finer detail with technical analysis to try to find the best of the best. All right, so, and again, this is what the funnel method, this is just written out. The stock to be traded should have daily and 5-minute chart aligned. The SPY super system indicators must align in the direction of the trade. This has got to occur. Okay, I'm not going to take a trade unless it's just an intraday, a quick 5-minute trade, 10-minute trade. But if any trade that's going to be a longer term trade, that's going to have these criteria have to be there. All right, and then I also use relative strength and relative weakness. Now it's important to know on the 5-minute chart, there's an indicator called the VWAP, which we'll talk about, volume weighted average price. It's something that every institution uses. It's a critical level. That's a critical level we use. You don't want to be trading long a stock that has where the price is below the VWAP on the 5-minute chart. Wait till it gets above the VWAP on the 5-minute chart to go long. Everything else can be okay, but you normally want it above the VWAP to go long, above the VWAP, below the VWAP to go short. VWAP is I only use it on the 5-minute chart. I don't use it on the daily. All right, again, enter near confirm support and resistance, same thing we just talked about, and have patience. All right, and these are the strategies we use in the room and on the alert service. I do straight calls and puts, of course, by just buying calls, just buying puts. I also do what's called straddles and strangles. These are non-directional trades. We've done quite a few of these this week. When you have a really choppy market, straddles and strangles are very important. If you remember the room or the alert service, you can look at the video. I go into some very deep detail on how to do straddles and strangles effectively. We've had about six this week that work really, really well, but the market has been conducive for that. I do debit spreads, usually weekly options expiration. We had a beautiful debit spread on Lockheed Martin yesterday, made about 45% in about 40 minutes using a debit spread. I do what's called time spreads over earnings. This is a non-directional trade. This is a trade that we put on just before earnings comes out to try to capture the volatility crush. Volatility, if you're not familiar with it, is what the market makers increase the premium on the options when they don't know what's going to happen. So when they don't know what's going to happen, the earnings are coming out. They don't know if the earnings are going to be good and the stock's going to go up or the stock's going to go down, how much it's going to go up, how much it's going to go down. They increase the prices on the puts and the calls. And then once the earnings come out, they take that extra premium out of there. The time spread calculation or the time spread strategy actually takes advantage of that and captures the volatility crush. And we call it calendar spreads. I have a strategy called weekly ATM strategy. This is used for neutral to bullish markets and neutral to bullish stocks. It consists of selling puts against a stock week after week after week while the stock is going sideways or up, and then maintaining a much longer dated put further out in time to protect that position in case it goes against you, and also to reduce your margin requirements. Credit spreads, we do credit spreads as well. I'm not going to get into all the detail on that. And then we do have one method we use in the room. Okay, now this is, whoops, let's go back here. Yeah, we do this by super system. This is the strategy here that we use in the room on the SPYs, the Qs, and the IWM on the indexes. These are very quick trades, very quick trades. These only can be done in the room. I can't alert on them. I can't even post them in the room. I'll let you know when the setup occurs, but every trader has to be responsible for their own entries and exits in these trades, but they're very quick. I'm going to show you we've had some spectacular results with this thing, and the criteria are very, very specific. Okay. Again, the alert service, just so you're aware of it, it's designed for day trades and short-term swing trades. This is not for somebody who's looking to invest for multiple years. These are just for day trades, short-term swing trades. Short-term swing trades would be considered overnight out to about 3 weeks. That's typically how long I'm in them for. Again, it's designed for traders who can't watch the market all day. You're going to get alerts on the highest probability trade setups. And how do we find the highest probability trade setups? I'll get into more detail, but we're identifying institutional involvement. We're looking at market internals. Is there more volume when stocks going up than stocks going down, or vice versa? And then technical analysis. Okay, so that's where it comes from. Question here, Scott, how do you get out of a short leg without getting robbed? How do I get out of a short leg without getting robbed? You're talking about on a spread? Is that what you mean? Because I'm not sure exactly what you mean. I don't know. Yeah, on a spread. Well, typically, most of the time I have a spread. I'm not going to leg out of them. Most of the time, unless it's going against me, I'm going to close the spread out all at one time. And that would be for time spreads. It would be for credit spreads, anything like that. The only time you would leg out is if you're very experienced in trading. Then you can take advantage by buying back the put, the one you sold, or the call, or when you sold it, and hold on to the long one if you're very good at technical analysis. But I'm not going to get into the details of that. That's fairly advanced. But typically I close the spreads all at one time. I get into them with one price and I get out of them with one price. When we did the one on Lockheed Martin yesterday, I think we get in at $1.05 for it was a debit spread that was expiring yesterday, expired the same day. We took it. We thought the market stock was going to move up. It was bullish. It looked great. We took a call, what's called a call debit spread. We bought a call and sold a higher price call to get in cheap. We get in for $1.05 or $105 a contract. We get out about 25 minutes later for $150 a contract. We just closed it as it went up. And if it was going to go against me, I would have closed it for loss. I wasn't going to try to leg out of it. Okay. Okay, so that's the equity curve. This is, again, I need to do a new one of these, but this typically is what our results look like month after month after month on the alert service. Again, this is based on putting $2,000 into each trade. Obviously, not everybody's going to do that, but I have to have some sort of a baseline to use. But and you'll see what our results have been. I'm going to go into some detail on that. Okay, now let me just take a sip of water here. I'm going to start talking about options. And again, some of the stuff's got to be basic. All right. So first thing you want to look at is an option chain. Now this is an option chain. This is on Bristol Myers. This is a fairly old one, but this is an image I took from Thinkorswim. But every option chain has the same information in it for every trading platform. It's got the same information in it. This happens to be on Bristol Myers. And you can see the stock was trading at 53.79. So option chains are set up with, this is the calls. The call side is over here. So these would be calls that you'd be buying or selling. This is the puts that you'll be buying and selling. All right. So this is the call side, the put side. All right. Over across the top, we have expiration dates. When do those options that I'm buying, when do they expire? Or that I'm selling, when do they expire? Typically, Bristol Myers has options expirations every week. Some stocks only have expirations every month. Stocks like the SPY, the Q, the IWM, the indexes have expirations every day. If you've heard the expression zero DTE, those are called zero DTE. There's no days till expiration. That's what DTE stands for. And when we trade the SPY super system, that's what we're using, zero DTE. But in something like Bristol Myers, they expire weekly. So you're going to pick a weekly expiration to choose. All right. Now, you see this little blue line that is highlighted here. See at the $54 level, this is the strike price. This is the expiration date. This is the strike price. When you buy or sell a put or a call, you're buying or selling it for a specific expiration date at a specific strike price. right? And that's what you're looking for. Now, if you look at Bristol Myers here at 54, it's highlighted as in blue. That's called at the money. This is as close to at the money as you can get. Stock's trading at 53.79. The closest strike that is close to 53.79 is the 54. So this is what's called your at the money strike price. All right, 54 is at the money. 53 would be in the money because the stock is above 53. So anything below here on the call side would be in the money. Anything above this is out of the money. Stock hasn't got there yet. Right, so that's critical thing. Now, this is the bid and this is the ask. Bid price, ask price. This is how much somebody is willing to buy it for. This is how much somebody's willing to sell it for. It's called the bid ask spread. And there's typically always a spread in here. Right, and what you really want to buy when you're buying options is you want to have the spread be fairly tight. Because if you're going to buy this, you're probably not going to get it for $61. You're probably going to get it for about $64. But anyway, that's the bid, that's the ask. Right, now there's a thing here called the delta. This is one of what's called the Greeks. The delta is kind of important. This is what I use to determine which particular option I'm going to take. The delta tells you if Bristol Myers moves up $1 in price, how much is this option going to move? It's going to move 52 cents. So if Bristol Myers goes up $1, then the Bristol Myers $54 call is going to go up about 52 cents, $1. So it's about half of it, okay? So typically at the money is usually around 50 or so. Now, if we look at the put side, on the 54 put, you notice the delta on the 54 put is 48. These always add up to 100, right? This is always 100. So this is the delta. This is something that's really important that I use for all the options that I buy, all right? So that gives you your expiration date, your strike price, all right? Here's your bid ask spread and your delta. Okay, so, and again, these are in the money, and the call side, these are in the money because the stock price has already gone above it. These are out of the money because the stock price hasn't gotten to it yet. And you can see how low the delta is on the out of the monies and how much more higher the delta is if going in the money. If you happen to buy a 52 call on Bristol Myers, every time Bristol Myers moves $1, that $52 call is going to move by 85 cents. Quite a big difference from 52, but look how much you're paying for it. You're paying for $1.89 versus $2.21 here. It's much more expensive to buy in the money, but they're also a lot safer, and I'll show you why. All right, so that's your basic option chain right there. There's one other thing that's on here, which is I have put in there, which is an open interest volatility, volume, open interest and volume. These are two things that tell you how many options have been traded today and how many there were when the day started, how many option contracts. If we look at Bristol Myers, the 554 here, see the 643 call options have either been bought or sold on Bristol Myers today. That's a pretty high number. You want these numbers to be pretty high. It helps you get in and out. It's called liquidity. The number here, which is the open interest, this is how many contracts were actually still open when the stock opened in the morning or when the option opened in the morning. There was 1,004 contracts either bought or sold that they were still active. This has not changed until the next day. This 643 is not added into this 1,004. This just tells you where we started the day, and this tells you how many new ones that come in. At the end of the day, they'll add in the buys, they'll take out the sells, and they'll come up with a new open interest. Right, so and you look how many open interests there is on this 55. It's 13,000. So high numbers like that make it easier to get in and out of the stock. Now I'm showing one other. This is an option chain. I want you to see this is the one from Thinkorswim. This is actually from my platform, from Tradier, but it's a little bit different because I can in this particular one I've got here's my bid, my ask. Here's the expiration dates, of course, across the top. Here's my strike price. It's just like we saw over there. This happens to be on Tesla. It's highlighted yellow for the money. 262.67, 262.50 is at the money. But I have quite a little more information right across my screen. I've got my bid and ask, just like we did on the Bristol Myers. Here's my delta, right? You can see that's 53.32 at the 262.50 level. I also have implied volatility. There's open interest. How many options were still active at the beginning of the day. Implied volatility is how much volatility there is in the stock. anything with a volatility over about 30 or 35 is pretty volatile. Anything below that is less volatile. Tesla is pretty volatile. It's running 73. That's pretty high. This is called intrinsic value. I'm going to show you what that means in a little bit. And this was the total volume for the day. Right, so I have all those things on my call side and on my put side, so I can see all of the information that I need to make a determination. Just so you see, there is a little differences in the structure, but the information is all the same. Okay, so let's talk about options here. And let's see if we have any questions. Nope, so far okay. All right. What are options? Well, options are a derivative. They're a derivative. They're based on a particular stock, what's called the underlying, and they're puts and calls. That's all there is. There's calls on them, which you buy if you're going to go long, and puts if you buy if you're going to go short. That's the only two things that make up all options. We're going to talk about what makes up the premiums. We're going to talk about intrinsic versus extrinsic value, which we just talked about. Talk about the Greeks a little bit. We just talked about delta. We'll talk about one more. Strike price and expiration date I just showed you. Volume and open interest I just showed you. And then we're going to cover the primary option trades. Okay, so I'm also going to give you a checklist of what option strategies do you use if you're bullish? What option strategies do you use if you're bearish? What option strategies do you use if you're neutral? In other words, you don't know if the stock's going to go up or going to go down, and really don't care. Those would be neutral strategy. And then we're going to talk just kind of quickly about this particular setups that you need when you're going to trade an option trade. Okay, so what are options? Okay, well you can buy calls and sell calls. You can buy puts and sell puts. That's all you can do. That's every option trade is made up of that. When you buy a call or buy a put, it comes with a right. When you buy a call, you have a right to buy that stock at that price by the expiration date anytime you want. That would be called exercising. You can go in and exercise it. Now, most people don't do that. When we're buying calls on a stock that we expect to go up, if the stock goes up, most of the time we're not going to go out and actually exercise that and buy the stock. We're just going to sell the call. We'll just take the profits and selling the call. But you have to understand that you do have the right to do that. And if you're buying a put, you have the right to basically sell the stock at that price. Now, the tricky part here is since you can buy or sell, if you sell a call or you sell a put, when you do that, that particular trade comes with an obligation, not a right, but an obligation. If you sell a put on a stock and that stock goes down, is above that price, for example, and you sell a put on it that it's going to stay above that price. If the stock falls down below that price, the strike that you sold, right, that put goes into the money. All right, so you didn't want that to happen when you're selling your put. You want the price to stay up. Once that goes down in there, the person who bought that put from you when you sold it has the right to go ahead and sell that stock. They'll sell that stock, and you are obligated to supply them that stock. All right, so that's the tricky part about selling. Selling comes with an obligation. Buying comes with rights, which you don't have to really worry about because it's up to you. So just be aware of that. So you can buy or you can sell. If you're buying, you are what's called long a call or long a put. So if somebody says they're long a call, that means they bought a call. They're long a put, they bought a put. Buying a call is bullish. Buying a put is bearish. Put is expecting the stock to go down. You can sell. It's called you're short a call or short a put. And we'll talk a little bit about this. This typically you should only be doing in spreads. Unless you're seasoned, you should never be selling a put unless you want to own the stock, and you should never be selling a call by itself. That's called selling a call naked. It's probably the riskiest thing you can do. Would be to short a call without not being in a spread. Very, very dangerous. So again, buying a call is bullish, selling a call is bearish, buying a put is bearish, and selling a put is bullish. All right, so this is all that makes up options. Buying and selling puts and calls, that's it. So what makes up an option premium price? We looked at the option premium price like on Bristol Myers. Well, the options, which can be at the money, in other words, very close to what the stock's selling at right now. It can be in the money, which means in a call situation, If Microsoft's selling at 100, all right, and you buy a $95 call, that $95 call is in the money. The stock price is $5 above your options or your strike price. Or you can go out of the money. So if Microsoft's selling at 100 and you buy a $105 call, the stock price hasn't got there yet. That's called an out of the money, right? So option premium prices, what they're made up of, obviously they're made up of the stock price. So if you buy a $95 call on Microsoft when it's selling at 100, the stock price is $5 above your strike price. So that option is going to be worth at least $5. That's called the intrinsic value. The intrinsic value is if my strike price is below the stock price, and I'm buying a call, then that difference between what my strike price is and what the stock price is the intrinsic value, right? So the intrinsic value is automatically going to be part of the option price. So it's going to be worth at least $5. Then the market makers include or add to it what's called implied volatility. We looked at the implied volatility on the option chain a minute ago. If the stock is very volatile, they're going to add a lot more premium to the option price. If it's not very volatile, they're going to add a little bit of premium to the option price, but it's still going to increase the price of what you're paying for the option. And the last thing is time decay. How far out is the expiration date? Is it a week out? Is it a month out? The further out in time you go, the more you're going to pay for time decay. They're going to add more premium for more time you get. They're basically charging you for that option because you've got a lot more time for the stock price to move, right? So that time decay is built into the option price as well. Now it's important to understand about time decay. As time goes by, as each day goes by and each week goes by, the amount of time decay that's built into that option premium is going to drop because you've got less time to expiration. That's going to reduce the value of your premium. So that's something to be really cautious of, because if your stock goes sideways for a week, all right, the stock price is still the same, the intrinsic value is still the same, the implied volatility is probably still the same, but the time decay has gone down because there's less time to expiration. That by itself is going to reduce the value of your premium, even though the stock has not moved down, it's moved sideways. Okay. Now the Greeks, we talk about the delta, we talked about that. How much the option price moves in relation to the stock price move, right? If the stock price moves up $1 and the delta is 50, it means the option is going to move 50 cents, right? If you buy a delta with 70, which is typically what I do, I try to buy deltas of around 65 to 70. So when I buy an option and the stock moves up $1, I'm looking to get 65 to 70 cent move in my option price at that time. Okay. All right, see if we have any other questions. Let me look here. Okay, we got a few questions here. Let's go by with them. Why not just buy a call? Well, you can just buy a call if you're talking about, Scott, I think you're talking about using a debit spread. But the debit spread gives you a couple of advantages. A, it's going to your risk is going to be much lower because you're buying a call and selling a call. So the cost of your debit spread is going to be a lot less than the cost of the call, right? Which allows you to actually kind of stay in it a little bit longer if the stock is like moving sideways. But you know, sometimes just buying a call is the best strategy. And I'm not going to go into all the details of why that is, but basically, if you're doing a debit spread, you're actually expecting the stock only to go a certain way, a certain amount up, and then stop based on resistance. Can I get a reply of this webinar, please? What? Gregory? A replay, yeah. There'll be a replay, Gregory. They'll be sending out a replay on this. Is it the same as you're talking about that delta? Is it the same as the probability of it hitting that level? Sort of. That's what a lot of people look at that as. But the probability is you know, the delta isn't just the probabilities. There's more things. There's more things involved in it within that. The question of if delta also equals the probability, not really. Not really. I mean, it's if you look at a delta of 50 when the stock's trading at that exact same strike price, what's the chance of that stock being? They're saying there's a 50-50 chance that by expiration it's going to be above that, and 50% chance it's going to be below that. I don't look at that. I don't look at that at all for probability. Did you ever refuse the call and let it go to zero? Oh, you mean just let the option expire worthless? Is that what you mean? Yeah, what happens occasionally if you're in a trade and a news event comes out overnight that you didn't see coming, and let's say you paid $1 for the option, and you wake up in the morning and the option's worth a nickel. I'm typically just going to let it go to zero because I'm going to hold on to it in case it bounces back up again. I'm not going to. In other words, I'm not going to. The only amount of risk I have on once the stock's gone down from $1 to 5 cents, my total risk at that trade right at that point in time is a nickel because I've lost all the rest of it. So am I going to just sell it to get a nickel back, or am I going to hold it for a nickel, hoping or thinking that perhaps the stock will bounce, and all I'm risking is an extra nickel, and I'm going to let it go to zero. In that case, I would do that. It's confusing, and they tell you until they tell you to open a position and closing a position. I'm not sure what that means. I mean, I don't know what you mean they tell you when you open a position. When you open a position, obviously, when you're opening an option position, typically you're buying a call or buying a put. That's an open. When you bought a call and then you decide to exit it and you're gonna sell it, that's closing a position, right? But you can actually open a position by selling a call and selling a put, all right? So that's probably what's confusing about that. In other words, if you do a debit spread, you're buying a call. Let's say you're doing a debit spread in Microsoft. You want to buy a $100 call and sell a $105 call to create a debit spread. You're buying the $100 call to open, and you're selling the $105 call to open. Both of the buying and selling is opening the position. That's probably what you mean. There will be a replay available. Yes, Gregory, they will. Okay, Scott, you've been a fan of spreads, but I can't get out of the short leg at a reasonable price, and it kills the return of the trade. I don't know. I'm not sure exactly what you mean. When you go into a spread, and I'm not sure if you're talking about a debit spread or a credit spread, but when you go into a spread, typically you should expect to try to exit that trade as one trade. And in other words, you want to if you're in a spread, you want to close both the long and short leg at the same time as one trade. When you're legging out, when you're trying to leg out, it's much trickier. All right. So if you say you can't get out of the short leg at a reasonable price, it sounds like you're trying to get out of just one leg on the trade. And I would highly recommend against that until you're pretty experienced, because you have to look at the price of the options at that point in time. Do you have to call my broker to do that? I don't understand what you mean. Call my broker to do what? Yeah, saying opening and closing makes it easy to understand. Yes, it does. Sell to close, they usually abbreviate it, buy to open, BTO, and sell to close, STO. That's normally how it's presented. You mean on the spread, Scott? But if you're trying to get out of the spread, in other words, you went into a spread, like when we went into a spread yesterday on Lockheed Martin, we went in for the spread, we bought a call and sold a call, and we paid $105 a contract for it, right? So I put a sell order in to sell the call that I bought and buy back the call that I put for $150. I just lifted it. That's the trade I put in. And when the market makers, when the stock got up enough to fill that price, the trade went through. I mean, that's how I do it. I'm not going to try to leg out of it. I wait until I get filled on closing both the long call and the short call at the same time. Like now, you have a 30-day debit spread out on Tesla. You have a debit spread on Tesla, 300, 295. Right, okay. Get a debit spread on Delta, 300, 295 puts. Okay, so you're short Tesla. Yeah, so you're not going to be able to get the full value because you're out a month on this. All right. Remember, you say the value is $330, right? For the $5 spread, because you've still got quite a bit of time left on the trade. So there's a lot of time decay in both your long and short puts. right, I don't want to get into a huge amount of detail on this because it's important to understand how these work. I'm just trying to get through the basics on this. Do I know the trade? You purchase the stock, sell a call, purchase a protected put using Netflix broker requires you to have 100,000 in your account. There are certain brokers that have certain criteria on specific type of trades like that, Gregory. But if you had just the long put, you'd have been up $2,500. Yeah, but you would have you don't have any. That's the difference between a spread. It would have cost you an awful lot more money, Scott, to get into that trade if you dropped the straight puts as opposed to doing a spread. Your risk was much higher. And yeah, it's nice when it works in your favor, but it's not so nice when it works against you, because if it went the other way, you could be down $2,500. So just remember that. There were reasons to do debit spreads and reasons not to do debit spreads. And I actually I have a video on all that. All right, I'm going to move along here because I appreciate the questions, but there's a lot of detail we're getting into here. This kind of stuff is what you're talking about. Is I discuss in the room all the time. I have videos on every single one of these particular strategies you're talking about. Debit spreads, when to use them, when not to. Credit spreads, when to use them, when not to. Straddles and strangles, when to use them, when not to. So, okay, so there's the delta. Theta, this is the time decay, right? This is the decrease in value of an option price as the expiration date approaches, right? So the delta, and again, Scott, that's why you can't get more than 330 for that right now, even though you get a $5 spread, because you've still got a lot of time decay in both the puts and both the long puts and the short puts right now. As you get closer and closer to the expiration date, if the stock stays in the same position it is right now, your value is going to go up. That's why I only do deltas with weekly expirations. I don't go out too far in time. All right, so the theta is the time decay. The value of the option price is going to decrease as the time decay, as the expiration date approaches. And as the expiration date approaches, the time decay is going to accelerate. The time decay is much faster as you get into the last week. So if you go out 4 weeks on time, the time decay is going to be fastest the last week of that expiration date. It's not as fast initially. The gamma is something we'll just talk quickly about. This is the rate of change in delta, all right, when the stock price moves. So if you get into a stock at the money and the delta is 50 and the stock price goes up $1, the delta is going to go up. It may go up to 52, it may go up to 55. And whether it goes up to 52 or 55 is dictated by gamma, which is the rate and change to delta. So if a stock is very volatile and the gamma is high, as the stock moves up, the delta is going to move up faster. Right, so high gamma means the option price can change dramatically with only a small price change in the stock. But that goes both directions. The intrinsic versus extrinsic, we just talked about. Again, the intrinsic value of an option price is the in-the-money value. Pretty simple. If you've got a $50 option on a $55 stock, it's got an intrinsic value of $5. Anything else you pay for that option, if you pay $5, if you pay $6 for that option, $6, the extra dollar is called extrinsic value. Extrinsic value is what is going to be subject to time decay and volatility change. Your intrinsic value is not going to be changed. If stock goes up, the intrinsic value is going to go up. Stock goes down, the intrinsic is going to go down. But the extrinsic value is going to be impacted by how much time is left and how much the volatility changes. Okay. All right, so the primary option strategies, these are most of the strategies. There's a lot of different ones out here, but these are the ones I call long puts and long calls. All right, buying puts, buying calls. Put credit spreads or call credit spreads, bringing in premium when you sell a credit spread for a put or a call credit spread. These are situations where if you sell a put credit spread, you expect the stock to stay above your short put. And when you do a call credit spread, you expect the price to stay below it. So this would be a bearish strategy. This would be a bullish strategy. Put debit spreads and call debit spreads we just talked about. Again, reduces the cost. Oops, excuse me just a minute. Right, sorry about that. My dog just had a visitor. So anyway, the debit spreads, again, I use these under certain circumstances, which I outline in my video. But again, it is going to be less costly to do this, and it's to do it under certain circumstances, as I did yesterday a couple times. Calendar spreads, we call time spreads. This is basically a non-directional strategy. We don't care which way the stock moves, but we want it to stay within a certain range, but we don't care which direction it goes. There's things called condors or iron condors. I don't use these. These are basically a combination of a put credit spread and a call credit spread at the same time. Butterflies, another strategy, which you basically are looking to identify approximately where the strike price is going to be when that option closes. And then straddles and strangles, these are both non-directional trades. You're just looking for a big move in either direction, don't care which direction. So those are all the strategies typically that there are. Most of mine are going to be long calls and puts, credit spreads, debit spreads, calendar spreads, strangles and straddles. I very rarely do any condors, and I very rarely do butterflies, or at least that I call out. A little bit more complicated. Okay, so here are the breakdowns between the bullish, neutral, bullish, bearish, and neutral strategies. If you like a stock long, you're going to do long calls, you're going to do short puts, you're going to put credit spreads or call debit spreads. Those are your options for a bullish strategy. If you like it short, you're going to do a long put, short call. I have this in red. Please don't ever do this. Don't do a naked short call. This is a disaster. All the trades that I take are what's called defined risk. You can't lose more than you put into a trade. If you're doing a short call, you can lose way more. Very, very risky. And the same thing with selling a put is the same thing. But you usually take ownership of the stock, and that's what you want. But short calls are definitely a no-no. Call credit spreads and put debit spreads. These are your bearish option strategies. Okay, and neutral strategies: condors, straddles, strangles, and time spreads. So those are the three. I give you an example on why naked calls are so dangerous. If you take a stock and let's say it's trading at 50, and you don't think there's any way the stock is ever going to get to 70 in the next month, so you go out and you sell a call at $70 and you collect the premium on that. Right? You actually goes right into your account, and all you need for that stock to do is stay below $70 between the time that you sold the call and the expiration date. Sounds nice, you know. Stock's never been above 70. That doesn't sound that risky. I'll just keep the money. Okay, so you wake up in the morning and the stock that was trading at 50, maybe it was a biotech stock or a tech stock, and you find out the stock company's been bought, and it was bought for a lot of money. We're not talking about $70 a share now. Somebody went out and bought that stock, and the company bought it for $200 a share, and this happens, right? So you're sitting on a $70 call that you shorted, that you sold, right? Remember what I told you, when you sell an option, you have an obligation to give that stock to somebody at whatever the price is that the stock is at when that happens. Now the stock's at 200, and you sold that $70 call, and maybe you got a good price. Maybe you collected $200 or $300 a contract, all right? But now the difference between 70 and 200 or $130 is how much you're short on that. You're going to lose $130 a share because you tried to collect $2 a share. So that's pretty serious. That's an example of what can happen with short calls and why you should never do them. Not naked. They obviously can be part of a spread. So the setups, we're just going to talk very, very briefly. Put credit spreads. You sell a put and buy a put at a lower strike price. And you collect money. You're expecting the stock to stay above this put price that you sold. A call credit spread is exactly the same, except you're doing with calls, and you're expecting the stock to stay above that price. In other words, it's below that price. That's a bearish strategy. A put debit spread, which was what Scott was just talking about. A put debit spread, you buy a put and then sell a put at a lower strike price for a debit. It's costing you money, and you're expecting that stock to stay below that put's price and maybe go down to the put that you sold. In other words, you're long a put and short a put. So you buy like a 300 and you buy it 300, sell it 295. You've got a $5 spread. That spread can go to $5. And if you paid $2 for it, the difference is you can make 300 at expiration date. That's called a put debit spread. Right? And a call debit spread exactly the same. You're expecting the stock to go up. Calendar spreads, we talked about that. That's a non-directional trade. Time spread, which is a kind of a calendar spread. We do this only on earnings. And a strangle is when you buy a call and buy a put one strike or more away from the money using the same expiration. If Microsoft was trading at 100 and you wanted to do a strangle on it, right, you would buy a $101 call, slightly higher than the price, and a $99 put. Right, so the stock's trading at 100. You're looking for the stock to move either way up past 101 or way down below 99. So it's called a strangle. A straddle is exactly the same strategy, except if Microsoft was selling at 100, you would be buying a $100 call and buying a $100 put. It's going to cost a little bit more, but the stock doesn't have to move as much for you to make money. You just want the stock to go well above 100 or well below 100. It's called non-directional. All right, so those are the setups. And again, I have videos on all these things. I don't want to beat these things to death. All right, so we spent a lot of time on options. The best option, the guidelines I can give you, and this is just a rule of thumb. Strike price, you should always use an in-the-money strike price for the stocks, the trades that you're doing. Not on spreads necessarily. Debit spreads, you don't have to. You can be slightly out of the money. But for any straight buying a call or buying a put, use it in the money. If the stock's trading at 100, you want your strike price to be below 100, right, for an in-the-money call. The expiration date, you want to go out at least 2 to 3 weeks, even for a day trade. Even if you're taking a call that you expect to get rid of today or tomorrow, you want to go out at least 2 to 3 weeks, because you don't want to be exposed to time decay if the stock moves sideways for the next 2 days. So that you go out in time to reduce your expiration, your exposure to time decay. And a delta of around 65 to 75. This is typically what I use on most of the calls and puts that I buy. Okay. All right. So we're going to talk about any other questions on options. I know we can get pretty detailed. What Scott was talking about there, he was doing a debit spread, and again, if a spread works for you and it moves way down, you can be kicking yourself if you did a debit spread that you didn't take straight puts. The problem, of course, is that you don't know that it's going to work until it works. And if it went the other way, or if it had gone kind of sideways, you'd be better off with a debit spread. All right, so we're going to talk about the SPY Super System and option room trade results. I'm going to kind of go through these. I'm going to try to run through them fairly quickly. I'll tell you this, that what I'm basing this on is if in every trade that we alerted on or posted in the room, if you invested $2,000 in each trade during in 2003, it produced 60,000 in profits, a little over 60,000 in profits. And again, if you had a $50,000 account, you'd be putting 4% of your account in each trade. That just depends. I mean, 2,000 is what I'm using for a baseline here. I don't put the same amount of money into every trade because it depends on what the market conditions are, but I have to have a baseline. So it produced 60,000, 2008. 2024, investing 2,000 in each trade produced about 55,000, down just a little bit, but not significantly. And a lot of it just depends on the market conditions. All right. These are January 2024 trades. I'm going to run through these fairly quickly because they can take a lot of time, but I do want to show some detail on them. This was January 2024. One of the things I want you to understand, usually I just show the results. We had 20 wins and 2 losses, 90% win rate, produced 7505 for 2,000 invested. But you notice that the percentage gains and percentage losses we have here. Again, the gains are going to be somewhere typically between 15 and 40 or 50%. That's the sweet spot of what we're looking for. 30, 35% is fairly normal for us as far as what we actually collect for percentage wins. So I just want you to understand, we're not telling anybody that they're going to get 200, 300, 400% on trades. All right, it's just not practical. You can't do it consistently. We did have 96 in Boeing that month. That was pretty good, and 65 in Mara. But that's a little bit out of the ordinary. We had a loss. Obviously, I take losses most every month, except one month I didn't. But that's January. Here's February, and I'll run through these fairly quickly, just so you can see the percentage were in the same exact ballpark. I showed the alerted trades here. We have slightly fewer trades on the alert service than we had in the room because of how quickly we trade them. Those are options wins, correct? Yeah, these are all options. Everything here is an option. Some of the strategies I've noticed, this was a time spread, this was a debit spread, this was a strangle, but these are all option trades that we took in the room, exactly. Again, you can see we had some losses here, but it was a big month. February, this was our biggest month last year for 2,000 invested in each trade, 11,745. The alerted trades, we produced 6930, 20 wins, 2 losses, right? Pretty good numbers, and you know it fluctuates. This was May, and I highlighted these in yellow when I was doing as a webinar and actually doing time spreads. But you can see that they're pretty much the same. Profitability is dependent on the market. How long can we stay in the trades? So you can see the percentages stay about the same. Again, 25, 26, 50, 18, 48, 32. And we had a $100 loss in bikes. Sometimes you get a news event that'll kill your option. Those things happen. June, same kind of thing. Pretty nice month. June, we actually made more money in the alert service than we made in the room. But again, you see the percentages staying right around the same. So this is important to know. So I'll just kind of zoom through these. You know, when you get the webinar, if you want to look at the results, you can look at them specifically. But we did have one losing month. I'll cover that. We had one losing month in September. 8 wins and 5 losses. Only 13 trades. It wasn't. Market was very tough. 62% win rate, lowest win rate I've ever had. We only lost 1786. I mean, when we made 45.35 here and 66,000 there, so it wasn't a big deal. The room lost about the alerts lost about 295 with 8 and 4. But we do have a losing months every now and then. I think I've had 3 in the last little over 3 years. This is called the SPY Super System. Yes, it is. The software is called the SPY Super System. I call everything the SPY Super System, but these trades here are standard option trades. These are not trading the indexes off the 5-minute chart that I'm going to get into in just a minute. Okay. So there was a September. October bounced right back, 74.48. November, decent. Now, the alert service just kind of quickly, I don't know why I stuck this in here, but typically what you're going to get an alert if you're on the alert service is you're going to get the stock symbol, you're going to get the option strike price, you're going to get the expiration date, and you're going to get the price to pay for the option. You get an alert for that. You'll get one alert to enter, you get another alert to exit, at least one. Sometimes there'll be multiple ones to exit because I might make changes, lower the price that we're trying to get out at, raise the price that we're trying to get out at. But you'll always get an entry price and an exit price that you can trade off of. Okay. Okay. Omar, looking at the results in the room, does that mean you only make 1 trade per day on average? How many trades you make on average per day? On the regular trades, Omar, on the trades like that would be considered all day or swing trades. In other words, if I'm taking a trade and I'm expecting I'm going to stay in at least for most of the day, or for overnight, or for a week, typically you're not going to see more than 1 or 2 of those a day. The SPY Super System trades, which we'll get to in a little while, which are very quick trades that we make off the 5-minute chart, looking at whether institutions are in the SPY, the Q, the IWM. There's going to be a lot of trades on those. Those are separate. I don't include them in the list I just showed you there. Those are all just the actual trades we take, which I would consider swing trades. Most of those have the potential to be swing trades. One of the nice things about these trades we take is, since I'm using the daily chart as my key, right? If I get into the trade and get out of the trade the same day, and let's say you can't get out of the trade the same day because you're under PDT rules, pattern day trader, which means you don't have 25,000 in your account, or you don't have a cash account, so you can only make 3 day trades a week. You can still hold the trade overnight because it's structured to be held as a swing trade. But you know, the market's been tough lately for swing trades, so I try to take profits when I can, 30-35%. But if you're still in the trade and you can't close it, you know that the trade was set up to become a swing. All right, so again, how do we achieve these results? I'm just going to quickly talk about what the SPY Super System does. we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. Market internals, in my case, is I'm looking at the total number of volume on stocks going up minus the total number of volume on stocks going down. Subtract one from the other. If it's positive, it's bullish. If it's negative, it's bearish. And we only take trades with both of these are in our favor. Not exactly. I take trades when the institutions are driving a trade and the internals are neutral. So if I'm going to go bullish, as long as the internals are neutral to bullish, then I'll take the trade if the institutions are in it. All right, and we do this by looking at when institutions are creating a trend. The software looks at triple screen assessment, or what some people call it fractal, across momentum and trend. 3 time frames of momentum, 3 time frames on trend. And if you get 3 time frames of momentum that are all moving in the same direction, as defined by momentum, the likelihood that momentum is being created by institutions is extremely high, well up into the 90s, 90, 95, 96%. All right, so this is just kind of a graphic. This is actually the SPY super system on thinkorswim. This is what it looks like. This was Tesla on a 5-minute chart, but I just wanted to show you what the actual platform looks like. And these indicators right here, this is the long-term trend. This is called the multi-time frame momentum. This is current time frame momentum. These are the 3 that I use. I've eliminated this recently and just put the oscillator in. These are what we want: green or blue for long, red or yellow for short. And you're going to get to see a lot of these here in just a second. This was a trade here on the SPY super system. This was off the triple Qs. This is the 5-minute chart that I'm using. This is the one I use for what's called the SPY super system methodology, using the institutional information to trade just by the Qs or the IWM. This was actually the SPY super system here on the Qs. And if you look here, you're looking at the indicators here. This is the multi-time frame momentum. This is the only one I use for doing intraday trades. Current time frame momentum. I show you where it went from green buying to yellow selling. Institutions were buying, institutions started selling. We got a move here below the 15. I'm going to go into all the details on this in just a second, but this just shows you what the setup is. And these are Fibonacci reversal candles right here. These are using Fibonacci candles. If you've ever used these, haven't used these, you should try doing them. I have a video on these things. They're very effective. All right, so now the SPY super system. I want to spend a little time on this. This is outside of the trades that we just posted all those results on. These are completely separate. SPY super system just trades off the 5-minute chart for the SPY, the Qs, and IWM. This would be for people who like to make a lot of trades a day, but want very specific criteria to be set up. These are the results we had from July through from now. And you can see how many trades we take here. In August, we took 56 wins, 6 losses, and 2 scratches. 8,200 in profits. September, 40 wins, 3 losses, and 2 scratches. Again, it just depends how many set up. 2,000 invested, 71.32. And here's October, 48.31. A little bit of a reduction. Now, it's important to understand, with the SPY super system, you're only going to have 1 trade on at a time. You're going to manage that 1 trade. You have to manage these trades because they're quick. So you've got to put the trade on and take the trade off. It's going to be a very short duration, but you're not going to have to watch 5 or 6 different trades. It's just 1 trade you're doing at a time. So in this August, when we had 56, 6, and 2, we never had more than 1 trade on at a time. Right? And November, this was 93.70, 54 and 5, 16 and 15 in December, 69 15 in December, 10,450. I haven't done the February yet. March, January was good as well, a little over 10,000. But so this is the SPY super system. These are intraday trades. These are trades. These are results of the trade of what I had when I made the trade. I can't post these. I can't alert on these. But this is the results I got following this system. And I mention them. I call them out in the room when the setups occur. And I've got people that make less money. I have people that make more money. But a lot of people really like doing this when we're waiting for high probability trades, swing trades to set up, because this gives us some nice income, as you can see. I mean, really, really good income. So to separate the two, in October 2024, the SPY super system, again, that we just looked at, did 4,831. In the trade room, 17 wins and 3 losses, 74.48. These are completely separate. This total does not include this. This total doesn't include this. These 17 wins and 3 losses have no relationship at all to these 33 and 4. These are completely separate trades. All right. Is November, again, 9,300 in the SPY super system off the indexes, very quick trades. November, we had 14 and 2, 73.93. So again, if you did them all, this is what you would have got. But these you have to manage yourself, and obviously you have to be a day trader. You have to be able to not be a pattern day trader to do this, because these trades are pretty quick, and you're going to be doing way more than 3 a week. In December, same thing. Again, 82% win rate here, 10,450, and in the room 45.97. So pretty good. I mean, this is. I just want you to know that these profits and these profits are not related at all. They're completely different systems. Okay. What size account do you need for the SPY system? Well, for the SPY super system, if you're going to be trading, Gregory, if you're going to be trading these fast trades, these SPY super system intraday trades, you got to have, I would say you've got to have at least 30,000 in your account, so you stay well above the 25,000 threshold. All right, so they're very, very quick, and basically all of these trades, what kind of trades am I making? I'm buying puts or I'm buying calls. That's it. I'm buying puts and I'm buying calls on these super systems. There's nothing fancy here. This is just directionally trading for puts and calls. What size account do we need? We just talked about what kind of trades. Yeah, puts and calls, straight puts and calls. Those are on the SPY, not the futures market. These are on the SPY that I did, Kent. But you can do the SPY super system intraday trades. You can do it on the futures. You can do them on commodities. You can do them whenever, anything you want. If you like to trade futures, you can do this on the ES or the NQ or the Russell. You can do the Russell futures as well. A lot of people trade the futures. They prefer to trade the futures, but the methodology works exactly the same. And if I want to trade the futures, all I do on the trading platform on the SPY super system platform on TOS is just put in /ES or /NQ, and I trade right off of that. Would that increase the profit? Well, your futures are leveraged quite a bit more. So yeah, I mean, typically your futures are going to produce a higher, not necessarily a higher percentage, but a higher profit. But you're also got a lot more leverage on these, so the risk is higher. Are they trade entries and exit just written? That for Omar, there's 2 different things in the room itself for stocks for trades that we I think are going to be a swing trade. I post them in the room and I put them out in alerts. All right. Let me show you. I'll show you just a second here. This is all right. So this is something I have in the room, and these are like trades from just the other day. This was an ANF. This was a strangle we did. Anything that says R I posted in the room. Anything that's RA is a room and an alert. And this is one we did here on the 5th. We got in for 385, sold for 425. This was a strangle. This was Lockheed Martin yesterday. Get in for $1.05, sold for $1.50. That was a really quick trade. But I post them here, and I call them out in the room too. But I don't do alert on these quick ones like this. Gilead we took long yesterday out to March 21st. This was alerted on, and it was sent out an alert. And this was called a lotto. This is one I did yesterday on a lotto. Very cheap lotto at the end of the day. So this is, and I have information in here. We have all of the criteria for what we try to trade. So that's what you see in the room. Right now on the alert trade, on the SPY super system trades, I'm going to let you know that the setup. I see the setup, but I can't call out the entries and exits because it's much too quick. You have to be able to manage those yourself. Okay. All right, so again, this is just kind of the recap of the October to December options room and SPY super system room, completely separate trades, same room with different type of strategies. We had this is the SPY super system, produced 24,651, and October to December on the room itself produced 17,774. So again, these you have to manage yourself. These results here I'm giving you. This is the results everybody who followed the trades got, because I put in entries, exits, everything. These I'm just calling out the trades when I see them setting up, but you are responsible for these entries and exit yourself because they're much too quick. All right, so again, they produced about 42,000 in that quarter. Pretty good results. Now, this is the SPY super system. I'm going to show you a chart on the SPY super system. It's going to be a little different in a minute because I get rid of this indicator down here. But this is a SPY super system trade. Now, this is a SPY super system on Thinkorswim, and it looks really busy. But let me show you exactly what you're looking for on the SPY super system. This is the only index we're looking at, the current time frame momentum. We're looking for blue or green for long, red or yellow for short. It's current time frame momentum. So we look at that. That's the only indicator we're using. Well, we use the VWAP. This is the volume weighted average price. This is a key support and resistance level. The next one is the 15. This is the 15 EMA. When the VWAP is getting far away from the 15, our 15 becomes our support and resistance level. So these are the two support and resistance levels we use to enter and exit the trades. So if you can see right here, the current time frame momentum went from red, institutions selling, to blue, institutions buying. This is where we entered the trade as it broke above the VWAP. Now the SPY super system puts in these little pink arrows. These are compression break indicators. It's breaking out of compression. We like that too. It gives us more conviction. So it broke out right here. So this becomes our stop, stay above the 15 or the VWAP. It stayed above the VWAP, stayed above the 15, kind of went sideways, and then it started to move back up. And it moved up pretty nicely, and then we get out once we see the candlestick starting to create dojis. Get out right here, and we $220 of profit per contract. This is a pretty big trade. Most of the SPY super system trades don't last this long. They usually produce about anywhere from $70 to about $150 a contract profits. This was a pretty big one, but I want you to see how simple it is. You're only looking at this, the VWAP, the 15 EMA. That's it. Now, this is a new setup right here that I got. You notice this is gone. This has been changed to the oscillator. So this was the SPY super system trade on 225. We just did this one just very recently. $90 profit per contract. Notice here's the price compressing. You see the breakout of the box or the pop symbol here coming below the 15. We're breaking below the 15, right? This is the indicator we're using, the current time frame momentum. It was already yellow, which was bearish. Went to red, even more bearish. So I'm just looking for a compression break as I got right there. So this is where I took the trade. One candle later, I'm out. As it came down like this, I get out on that trade right there. I didn't wait long. I took $90 profit because the market was very choppy that day. So I said in the room, we got to set up on high probability trades for a SPY super system right here. I'm taking it, and I took it. I told them I'm out of it. Everybody is managing their own trades at this point. All right. This, by the way, if you buy the SPY super system software, you get all of these indicators and you get all of the webinars and all of the videos on how to trade these things. But you also get this template, which is the normal template, but you get this template, which you can swap back and forth. This is just for people who are just trading the SPY super system. And again, this says SPY, but it could say ES, it could say NQ, it could say RTY, it could say anything you want to trade. It could say GLD. You know, you can use anything for SPY super system. Typically, I'm using it on the indexes. But as you can see right here, again, this is the same one we just took off the last trade. But again, no, you know it's not. This is a separate one. Goes from blue right here to yellow. It's buying, selling. We get in here, we get out here. But this makes it simple to see if you're using the SPY super system. This makes it very easy to see that. So you get both of these layouts if you buy the software. Okay, now, so again, this is a trade-off of the new template for the SPY super system that we just showed you. This was a beautiful trade in the SPY here. And again, you can see, I didn't even put any arrows in here, but you can see the green, bullish, and went to yellow, and then it went right back to green again, and it popped above the 15. You could even take this right here, right? Now you'd watch it to see what happened when it went to yellow, but it popped right back again. This would be your trade in this particular one. You just be watching it. It's way above the 15, so you want to take profits as soon as you can. Any kind of indication of momentum dropping, you would take it. But this is the new setup. Current time frame momentum, VWAP, volume weighted average price, 15 EMA, with your pop out of the box, break out of compression symbols right there. Does the software come with the trading room? It does not come with the trading. If you buy the software, you get a month in the room for free if you buy it for an annual subscription to the. But it doesn't. You don't get it with the room. But if you're in the room and you don't have the software, you're going to see it because the actual chart, the SPY Super System chart, is up in the room all day long. I'm moving it back and forth from stock to stock, but it's up there in the room all day long. But you don't have it yourself. You would have to buy the software yourself to have to trade it by yourself. Okay, this was using a new template for the SPY Super System, as we just said. This is what it looks like. It takes a lot of the noise away, takes a lot of the extra indicators out. Now those other indicators are critical, by the way, for doing longer term trades. Right, and this is just a kind of a recap of some of the SPY Super System trades we did. Always will be on 5-minute on the SPY Super System. This was $130 profit per contract here. Notice I'm waiting for the stock to come out of compression. See this compression? As soon as I get a break right here, this little pop symbol, I take the trade and I ride it up to here for about 130 bucks a contract. Pretty nice. Again, another SPY Super System trade here. See, it went from yellow selling to blue buying. Pops up off the 15. I take it, doesn't go anywhere. It just kind of moves sideways for half an hour, but it's still above the 15. So I stay in it, I stay in it, I stay in it, and I finally get a move up and $90 a contract profit. Notice this thing stayed green the whole way across. Current time frame momentum stayed green all the way across. This was a SPY Super System one here back on the 15th of November. Breaks down below the VWAP right here, perfect. Everything was red. We could tell the institutions, and we can see the institutions are selling the heck out of the IWM right here. So we took the IWM right here off of this pop below the VWAP. We take it here and we write it down. It's kind of just drifting down, but staying below the 15. Remember, that becomes our stop. And then as soon as I get a doji and a green candle, I'm out. 120 bucks a contract on that. Kent, all day, 9 to 4 Eastern. Yes, 9 to 4 Eastern time. I've got hundreds of people in the room. I got them from all over the world. I mean, I have people that live in Vietnam. A couple of people living in Vietnam. They trade 9 at night to 4 in the morning. I've got quite a few people in Israel. I got a lot of people in Italy, Germany, South Africa. I'm just about every country. England, Wales. This is an option, 2 to 3 weeks to 6. No, for the SPY Super System. Let me clarify that. On the SPY Super System, what we're buying before 12 o'clock or before 1 o'clock in the afternoon. I'm buying 0 DTE. I'm buying an expiration of today's expiration, right? And the delta I don't look at too much. What I'm doing is buying as close to at the money as I can get. One strike in the money if possible. Usually one strike in the money, depending on what the strikes are relative to the stock price, and they're going to expire today. Now, if I take one after 1:30, 2 o'clock in the afternoon, I'm going to take the next day's expiration. Okay, it'd be one DTE, but I'm going to get out of it today. And the reason I switched to tomorrow after lunchtime is if the stock moves sideways or the option moves sideways, I'm trying to mitigate the amount of time I'm going to get on the 0 DTE. So I switch over to the next day. But they're always going to be 0 DTEs on these. The 65 to 70 deltas is on the swing trades, right? Not on these SPY Super System trades. Okay, again, this was another one for 120 bucks, breaking down below the VWAP, just so you can see the structure. Obviously, the institutions are selling it. Here, the institutions are selling it as well. This was a pretty nice trade. This was a big, huge trade for me. I took a break below the VWAP right here. It was yellow. It was already yellow, and it stayed red all the way across. And I stayed in the trade. It just kind of paced sideways. And I didn't get out. And it popped above the 15, but pulled back. Never closed above the 15. And then I took it. I wrote it across this thing called the pivot point. This white line is the pivot point that the software produces. Those can be support levels. So I was very hesitant here not to get out, but it never went back up again, and I wrote it right down. That was probably one of the biggest trades I've had in the SPY this year. Another nice SPY Super System trade here. So I just want to show you these setups again, so you can see them clearly. Blue buying, popping above the VWAP, popping above the 15. This is where you take the trade right here as it breaks out and ride it up. 150 bucks. a contract. Here, I took a trade here. I didn't put any arrows in here. I want you to be able to see it yourself. Selling, buying. Where do they buy? Right here. Do I buy it here? I do not. It's right against the VWAP. I wait for a break above the VWAP. Here is where I would enter the trade. Right there. Green, breaking above the VWAP. Ride it up to here. I'm out right up here, just like 4 or 5 candles. Omar, can I repeat the room schedule? Yeah. I usually open the room about 9:15, and I'm open till 4. Sometimes a little after 4 because I'm answering questions. I take time for lunch, but I'm in the room all day long, and I'm following the market all day long. I'm making comments on what the SPY's doing. Do we have a bullish trend? Do we have a bearish trend? Is it choppy? Where are we in relationship to the VWAP? All day long. I mean, I'm trading all day long anyway, so I might as well do that. How do you manage the stock options room with the SPY room? How do I manage the stock options room with the SPY room? You're talking about the SPY super system, Gregory. The SPY super system, again, I have the chart up in the daytime, and I show the index I'm looking at. Typically, what I'm doing is if the market is going up and the SPY's up 1.5%, the Qs are up 1%, the IWM is up 0.5%, I'm going to trade the SPY unless it's got a nearby resistance. In other words, I'm going to take the strongest index. But I keep the chart up there all day long, and I let you know when I see a setup, and I'll say, okay, I'm in the SPY calls, and then I'll say I'm out of the SPY calls, but I can't tell you when I get in or the price I get in or the price I get out at the time because it's all very, very quick. If you've done this before, you know it's very quick. How do you out the VWAP on your chart? The VWAP is basically it's included in most platforms. That pink line, which is the VWAP, is something that's it's just included as one of the indexes you put on your chart. How do you put the VWAP in your chart? Yeah, if you get the software, it's going to be on there. But even if you don't have the software, if you go into TOS, you can add the VWAP as an indicator. Do I manage them all at the same time? Well, I mean, typically the SPY super system trades are going to be very quick, right? The other trades, if I've got a trade on that's a swing type trade, I'm watching that. But typically on a swing type trade, remember, I'm getting in based on the daily chart. I'm going to get out based on the daily chart. I'll usually have a sell order set to take profits if it hits a certain level. So I'm not micromanaging those. The SPY super system trades I have to micromanage. In TOS, you have to anchor it. Yeah, I typically you're going to anchor it to the first price of the day. The VWAP is recalculated every day based on the opening price. I mean, you can put a VWAP and anchor it to anything you want, but I'm only interested in what the VWAP is for the current day because that's what the institution's doing. They're not looking for what the VWAP is, how it's anchored to the last earnings date or anything like that. I'm just looking at the VWAP on a 5-minute chart. So it's going to recalculate every day at the open. All right, so there's some more trades. Again, I'll just kind of put a bunch of them up here. So if you're interested in the SPY super system, you can see exactly where you would trade something like this. Again, you can see we've got green here. I'm not trading it up here. See how far away we are from the 15 and the VWAP. So I wait for the stock to move sideways. Now now it comes right to where the 15 is. Now when I know I'm green, this is where I'm going to get into the trade right here. As it pops up, I get in here. I ride it up, and I'm out as it goes flat. All right, so those are, I won't beat a dead horse here. This is when I took short and long. I took the VWAP, I took the SPY short here as it broke down below the VWAP. Everything's red. You can see the selling the heck out of this thing. I buy it here. I ride it down for 3 candles. I'm out. I'm out in this little bounce. Now it starts to recover back up again. See, I go above the VWAP here, and see the blue goes from red selling to blue buying. It breaks above the 15 and the VWAP. I take a call. I take calls right here on the SPY, and I ride this up. Now this pivot point I had mentioned before, this becomes resistance, so I'm being very cautious as soon as I get to this pivot point. As soon as I see some things start to slow down, I'm out right there. Okay. All right. So I won't go in. I won't go. We've seen enough of those. I don't want to go through all of these anymore. But that is the SPY super system. We do a lot of trades on that. It's for people who want to intraday trade. It's not for everybody. You have to manage these yourself. But the criteria that we've got, which is the current time frame momentum, in the VWAP, in the 15 EMA, with breakdowns and breaks ups, is extremely effective, extremely effective. On choppy days, it's hard. One of the criteria that you really need to do is you look at the market, and if the SPY is trending up, you know, you've got a kind of a bullish trending day, then those are going to produce much better than they will on a choppy day. But they'll still produce on a choppy day, but your profits are going to be smaller because you can't stay in them very long. All right, so I'm going to look at some recent trades. These are the high probability trade setups for using this. This would be the normal trades, the one we do in the room off of the daily chart for the most part for the alert service and for the room. And again, I'm looking at daily chart here. Here's your SPY super system. You can see the indicators: trend, multi-time frame, current time frame. Now on the dailies, when you're looking to swing a trade, you want to make sure the multi-time frame momentum here and the current time frame momentum here are both green or blue for long, red or yellow for short. You wouldn't be taking it here. You've got yellow on the multi-time frame and green on the current time frame. Those don't match up. That doesn't give us enough conviction that the institutions are in there. Once it all goes green or green and blue, now I have conviction that it gets in there. And I should have probably caught it here, but I didn't catch it here. This is the VWAP. I don't use it on the daily. The software puts it on there, but I don't use it. Right, so here it is going sideways. This is where I took the trade right here, because it's actually where I caught it. It was compressing. And then I rode this thing for a 25% profit. I left a runner on this thing on HIMS. We made a 25% profit on this thing overnight, but I had left a runner on. The runner went up 269%. That was kind of a fluke, but this was still a pretty nice trade. This is Palantir. We bought it here again off the daily chart. Notice buying going on. This is an older one, but it broke above compression and popped out. I took profits on that one, 31% profit. Is Twilio. See it again right here. We're breaking here. Notice, actually, I got it here, not here, because this had to go green. I had green, green. Quick trade, 2 days. That was a debit spread. Lulu took a short here. Here's earnings. It pops down, compresses. Here I see the compression break. It goes from buying to selling on the multi-time frame. Current time frame has been red. Institutions are selling this. I take it here and entered for 192, get out for 300 on an overnight trade. All right, Omar, you got a question here? You've always had this question. I hope you can answer it. Where can I win or lose money in options, more money in options or in futures? I don't know why I should decide between options and futures. Yeah, I can tell you something. Let me tell you something about the difference between trading futures and trading options. Now, on trading the SPY super system, which is trading the SPY, the Qs, and the IWM, that's going to be pretty much exactly the same as trading the ES and the NQ, all right, because they're indexes. But on stock trades, when you're trading stock, remember the one criteria I specified, which was really important, is relative strength and relative weakness to the market, all right? How is your stock trading in relationship to the SPY or the triple Qs? Relative strength is not something that you can figure very much into futures or trading the SPYs and the Qs. So that's why I believe that for high probability trade setups, you're going to have a better success rate with trading the stocks or options on the stocks that have relative strength and relative weakness. But you don't actually have that on the SPYs or the futures. Futures are going to produce more volatility. They move more because you got a little more leverage. Your P&L moves a lot more, and they can be very quick. But if you're wrong on them, it can be pretty disastrous. And most new traders, my recommendation is not to trade futures. It's to trade stocks or options on stocks, because you can focus on relative strength and relative weakness, which you don't have in the futures market. That's my opinion on that. I mean, I trade them both, and the SPY super system is just like trading futures when you're trading the SPY, the Qs, and IWM. But remember, the SPY super system with the setups here and the VWAP, et cetera, if you were trading it, you can trade a stock intraday, just like you traded. Instead of trading the SPY intraday, you could trade Tesla intraday or Apple intraday. And if you got relative strength or relative weakness in the stock, all right, versus the market, and the stock is going down and it's got relative weakness to the market and the market heads down, instead of trading the SPY, you can trade Tesla, buying puts and then selling puts, or buying a put debit spread. But and you're weighing, you're putting relative strength and relative weakness into that calculation when you do that. And that's not something you can do to any big degree with futures. I mean, you could look at the futures and say the SPY is trading stronger than the Qs and stronger than the IWM. So if I'm going to go long, I want to trade the SPY. So that's sort of a relative strength, relative weakness comparison, but it's not like the stocks have. So trading stocks with relative strength, relative weakness is a huge criteria. It makes a huge difference. I do not trade on thinkorswim through Schwab, Kent. I use the platform, of course, because it goes on thinkorswim. So I use the platform on thinkorswim. I trade through Tradia Pro. I trade through Tradia Pro. Okay, that's who I use for my trading. I don't have to use any. You can use any platform you want, but you're gonna dictate your trades are gonna come from what you see here, all right? What you see on the SPY super system right here. Right, I got a bunch of these. I'm not going to go into all of these, but this was a nice one here on overnight trade. Again, see the red green here. Hold on, just one. Okay, the dog was a little impatient. He wants to go out. All right, so there was a nice trade here too. This shaded area here is called the dynamic compression zone. The SPY super system produces that for a breakout here. So this is where we took it here and we get out here. This was an overnight for about $300 gain, pretty good. All right, and this was using the SPY super system on a 5-minute chart on Amazon. Now this is what I was talking about, being able to trade stocks intraday. Amazon had a good big bullish daily chart, so I was going to go long, but I did this just on the intraday trade. Did this about after 1 o'clock, and again, you notice how we're green here, right? It went from yellow to green. I got a little break above the 15. I took it right here off of this pop out of the box symbol. I rode this thing up 45 minutes, 32%. So you can use the same system for trading stocks intraday if you like to trade intraday stocks as you do on the SPY, the Qs, and the IWM. The thing with the SPYs and the Qs and the IWM is that they have a lot of volume. They have a lot of liquidity in the options. You're not going to have a hard time getting in and out of the trade like you might on something like Tesla, which might have $1 or $1.20 spread between the bid and the ask. So you have to take that into consideration. But the software with this methodology works very well, and I use it on trades all the time. Interesting, when I took Lockheed Martin yesterday, again, we took a debit spread on Lockheed Martin. It had relative strength. It was breaking out above a VWAP. It had a Fibonacci reversal candle, and that's when I entered the trade for the debit spread, and that's what produced $105 in, $150 out in about 25 or 30 minutes. The system told me that the institutions had been neutral on Lockheed Martin for an hour or so, and it had went long. Started buying into it again. It broke above the VWAP. It was the perfect setup. All right, this is ENPH. This was a big drop here. Notice the compression. Too far away to get into the trade. Remember, buy at support, sell at resistance. We're selling right here at resistance. Here's the 15. That's resistance. We sell it here. We ride it down for an hour and make 20%. This was Verizon trade again off the 5 minutes. So these are intraday trades on stocks, which you can do. But a lot of the trades I do are swing trades because a lot of folks can't trade intraday. They have the pattern day traders. So everything I take can be used as an overnight swing type trade. But I was taking this trade, and I got 50% an hour. I'm out. I'm not going to give up that kind of a profit. All right, Tesla, we use this for an overnight trade. But I think you can see what I'm talking about here as far as these setups are concerned. All right, and again, here's what we do here on the strategies we use. I went through all of these already. And a lot of these strategies are dependent on the market. Straight calls and straight puts, straddles and strangles. What's the market doing? Straddles and strangles, if I have no idea what the market's going to do or what the stock's going to do, it could go way up, it could go way down. If you see a stock that tanks all of a sudden sometime during the day because of news, drops way down, I'm not going to try to take it short. I'm not going to have a FOMO. I'm not going to jump into the trade fear of missing the trade out. What I'm going to do is I'm going to look at I'm going to look at the option prices, and I'm going to look at what I can do. What can I do with a straddle or a strangle on it? That way, I don't care if it continues down or if it goes back up again, but I want it to just move a lot. So the market's going to tell me what strategy I'm going to use. I mean, it's very, very critical. This I don't care. I'm just trading this every day off of the market. If I've got a trending market, I'm going to do better than I am on a choppy market, but they're all going to do very well. Okay, so that is the presentation. I hope you found it helpful. It took quite a while. I did want to spend some time on options. We had a lot of great questions here. By the way, in the chat room there'll be a link for what I'm going to show you right now, which is the offers that we've got. Again, you can get a 2-week free trial, which will give you a 2-week free trial to the trading room and the alert service. Right, you'll get both of them. We bundle the alert service and the room together. They used to have them separated, but we put them together here recently for kind of a special where you can get the alert service and you get the trading room. You're going to get all of you get access to all my modules, training modules. I got about 30 of them out there, and then you can free for 2 weeks. You can cancel anytime you want, and if you like the room, it's going to roll over to a quarterly subscription at $3.96 a quarter. Right, and you can cancel at any time. That would be for your free trial for the room and the alert service. Now, if you want to get into the room and get a better price, if you want, I mean that $3.96 is fine, but if you bypass the 2-week, you like what you see, you can go ahead and take $11.96, and that's going to give you the room and the alert service and the videos. Also, you'll have access to a Discord room. We have a couple of other professional traders in there. That's $11.96 a year. This is really, really a good deal for the room and the alert service. And if you want to get in for, some people don't like to do subscriptions every year. They have an offer where you can do $24.96 one time. You're in forever on that. All right. So that's the room and the alert service. Right. Here's a 2-week trial, rolls over to a quarterly. But this is the better deal, of course, because it's a lot cheaper. $3.96 a quarter times 4 is well more than $11.96. And this is the software. This is the SPY Super System. This is the actual software. If you want to buy the software, that would go on your Thinkorswim platform or your Ninja platform. If you don't have Thinkorswim, they can put it on Ninja. It's called the Money Flow Tracker. Rightline will do that. You buy the software. They actually put it right on they take over your machine, put it on there. It's going to look exactly like mine does. And I'll show you that in just a second. I'll show you exactly what it looks like. Exactly like mine does. Again, you'll get the videos. You get a month in the trading room and a month of the alert services if you buy the software. They'll put it on your machine. If you don't have Thinkorswim, you can download it. They'll download it if you want, and they'll put the software on there, and you're ready to go. That's $14.98 a year for the SPY Super, that piece of software, which I think I would assume you'd agree is knowing what the institutions are doing is a kind of important edge. Or you can do a one-time payment for $19.98, which is unbelievable, $500 more, and you get this. You don't have to buy this every year. So again, same thing. Again, you get all of the information here, and I'll show you some of the scanners and stuff that comes with that. But again, we got links there. If you want Rory to talk to you a little bit more about it, you can just go ahead and put your name and number in the question box. And I'm going to show you the actual software there. This is the SPY Super System right here. This is on Tesla. These scans aren't working right now. These are cascading up scan. These scans come with the software. They're not working because Thinkorswim is doing maintenance right now. But if I can switch this over, I have quite a few scans in here. This is the cascading up on a daily basis right here. And then I have that other one was a 5-minute basis. So the scans will populate every day. And here's the software. It looks just like if I move the scans out of the way, you get more space. So if you get the software, this is what you're going to get. It's going to look exactly like this. Here's your current time frame momentum. Here's your multi-time frame momentum. Here's your long-term trend. Here's your VWAP. Here's your 15 EMA. There's Tesla. There's Tesla right here, which, by the way, I shorted yesterday right here. As it came down below the 15, they were selling. I took puts on Tesla right here, and I get out right down here. So that's how I treat this as a SPY super system for a stock. But Tesla's it's obviously much trickier because you've got pretty big wide bid-ask spreads in these things and fairly volatile. But if you look at the SPY yesterday, here's the SPY yesterday. Let's go down to the end of the day. Very choppy yesterday, but there was some decent entries in the SPY here. See, here's one you can't take. It's blue, but you can't take it because the VWAP's right here. So you want to find something like right here. This was a good short, right? This was a good short. See, it's coming below the 15. Here's right here is the current time frame momentum. You see how it's red, dropping down right there. You take this short, you write it down. As soon as you start to get tails on this thing and it starts to bounce back up again, you go ahead and take it off. All right, and so that's what I use. And one of the things I use is Heikin-Achi candles when I'm looking for the entry. If I see an entry right here, Heikin-Achi candles produce flat tops. They have a video on these Heikin-Achi candles, which I would recommend you learn because they're very helpful for trading. This is where the breakdown occurs right here. You take it short and you're out right here. Everything's red. Everything's red. So the institutions are buying these things, are selling these things. Right, so that's what you use. You can use it again if you're interested in the futures. I can put the ES in there just as easily as the SPY in there. So as it populates, there it is. So if I look at the ES, I'm going to move this down to current time, current yesterday. Here's the ES. The ES, you can trade this exactly as see, here's the ES breaking down, same as the SPY did right there. Perfect entry on the ES. Nice little trade right there. Okay, I wouldn't suggest taking this long because you get the VWAP in the way. Okay, so that's the software, that's the room and the alert service, and there's the free trial if you're interested in that. 2 weeks isn't an awful long time because especially in this market, the market's been brutal here lately, but we still make money. So it's just more of a struggle when the market's chopping around. So those are your options right there. Omar, do you give us trade alerts or instructions on Discord? Yeah, in Discord, all the trades that I post or put out on alerts, those also are posted in Discord, and they discuss them in Discord. Right? There's two traders out there. Now they also talk about in Discord. They also have other trades that are high probability trades that they're looking at. These two professional traders. I've traded with them for many years. And they also will post information on what sectors are performing the best. They post information on any upcoming news events, etc. I have a news feed running all day, the Trade Exchange news feed. So if I get anything such as an unusual option activity or some unusual news event comes out, some company just cut their guidance in the middle of between earnings dates, those are significant, and I'll relate those to the room and look at the stock and see if is there any trade based on it. Can I show the SPY super system on Ninja 8? I can't. I don't have Ninja up and going. It's called the money flow tracker over there. It produces the same information. It's going to produce the same information as the SPY super system does, but it looks different because of Ninja. It's going to look different over there, but it's the same information. Ninja. Most Ninja traders are trading futures. I mean, that's what Ninja is for because the commissions are pretty low. I've traded on Ninja before. But the information that you're going to get now, it's going to be a little bit different than the SPY super system, but it's basically, you're still looking at money flow, you're looking at momentum, you're looking at trend, all of those things. Okay. All right, hopefully, I think that's all the questions. I didn't mean to go on for so long, but we had a lot of questions, a lot of really good questions, and I appreciate that. Appreciate that. All right, everybody, listen, have a great weekend. Enjoy your weekend. I hope to see you in the room or on the alert service soon, and have a great weekend again. And I think you'll find if you're serious about trading and becoming consistently profitable, which is, listen, that's the name of the game. For a retail trader, the name of the game is to be consistently profitable, not just profitable sometimes. I think what we've got here is the best piece of software that can identify when institutions are in the trade and when they're not. We've got the best criteria for finding high probability trade setups. They've all been tested out for many years. And I think that the education that we offer in the room, basically answering questions all day long, posting trades and showing people why a trade's good or why it's not, to try to help educate folks as far as that's concerned. So we do a lot of time doing that. You're welcome, Ken. Thank you. Thanks for coming. I appreciate it. All right, everybody, have a great weekend. We'll see everybody on Monday, I hope. We'll take two and see how we feel. Sure, that's fine, Omar. When you come into the room on Monday, just let me know that you were here in the webinar today. And if you have any questions, ask them. I want people to ask questions all day long. Sometimes I have to step away while I'm looking for stocks to trade, etc. And then there'll be a bunch of questions and I'll go back and get them. But if any questions you've got, happy to answer them. So look forward to seeing you there. All right, everybody, have a great weekend. We'll see everybody on Monday, I hope.